welcome back to another video. I hope everyone's doing good. Today I'm going to be covering portfolio management. The reason that I'm going through this topic is initially I was creating a presentation based on risk management, and as I was writing things down I realized that it started to get quite lengthy, and because there's so many different topics to cover and I thought each one deserves that little bit of depth to it and to be explained properly, I'm going to be creating a new series. I'm going to be working through each small topic, making smaller videos, hopefully around 7 to 8 minute videos on average, let's say, working through them, and then you guys can get a better understanding of what risk management, trade management is in general. But yeah, today we're starting with portfolio management. So what is portfolio management? Most investors diversify their portfolio to include several different investments, including cryptocurrencies, stocks, and other ventures. So if you don't already know, a portfolio is essentially all the money that you're investing into whatever. It's just your investments and how you're essentially splitting them up. So as I said here, people split them up through cryptocurrencies, stocks, and other ventures, including businesses and whatever else they may be involved in. So although a lot of the stuff I teach does apply to forex and stocks, including especially the technical analysis stuff, my content does gravitate a bit more towards crypto. So I will be talking more about cryptocurrencies in general and how things work within the crypto environment. So cryptocurrency portfolios typically dedicate a certain percentage or amount to large, mid, and small market cap coins. This diversity can allow for better risk management while also allowing the investor to maximize profit by allocating suitable amounts to different projects. So what this just means in simple terms is if you have money, if you have $1,000, let's say, you're not gonna get your $1,000 and just throw it into whatever. You're not gonna blindly just start putting it into coins. And if you are, then you definitely should not be investing. But you're going to get certain amounts of your money and put it into certain projects for specific reasons, right? And these reasons and your conviction with these reasons is essentially going to decide how much you might be putting in and how much you might be risking. So over here, I just want to show you guys an example for a portfolio. So first things first, this is not financial advice. I'm not recommending anyone buy any of these coins. I'm also not recommending that this is the layout that you need to follow. This is how much you need to dedicate to large caps, mid caps, small caps. Like I said, this is an example that I'm going to work through and explain why I've made these decisions. And from there on, it's up to you to decide you're going to do whatever for whichever reasons after you gain an understanding of why I'm doing what I'm doing. So I want to start first with the large caps, right? So if you don't already know, market cap is essentially, in very simple terms, how much a coin is worth in total, or how much asset is worth, because it applies to stocks and other assets as well. So for example, out of everything listed here, Ethereum has the highest market cap, right? If you use a website called Coin Market Cap, you can go on there. There's other websites as well, but that's the one I use. You can check the market caps of coins and lots of other information about them, right? So Ethereum is the second biggest cryptocurrency after Bitcoin. It's been around for a while. So because of the market cap of Ethereum, the size of it, it doesn't move as easy, meaning price doesn't fluctuate. It's not as volatile. So it's essentially a less risky and more stable investment, especially because it's established. It's been around for years. It's not, from what I see at least, I don't think Ethereum is going anywhere, right? So that's why Ethereum is the biggest holding. It's 20%. It might not bring you the biggest gains of everything listed here, but you're putting your money in there. It will most likely grow, and it'll grow at a steady rate, or at least at a steadier rate than the other coins listed. But it essentially means that your money is also safer. Again, in the large caps, I've got a coin called Luna and another coin called DOT. Very similar reasons. They're large coins, they have large market caps, and they're fundamentally sound coins as well, which is very important. It's all about doing your research, looking into the projects, and then deciding, okay, I like this project. This is why I like it. you might shortlist 6, 7 coins and then decide, okay, I'm going to pick these two, I'm going to pick these three, and so forth. It's really up to you. The system is yours. You customize it to your own needs and wants. So moving on to mid caps. So of course, first thing, we've dedicated 40% to our large caps because we know these are the more stable investments. They will bring us return, but they're also going to keep our money safe. They might not bring us, 1,000%, 2,000%, but it means that your money is growing just at a steadier rate. Then coming to our mid caps, so as it should just be visible, they're kind of like the middle ground between our small caps and the large caps. They've got a medium-sized market cap. So over here, I've listed some coins. All of these coins I have listed, I think personally are fundamentally sound. Again, this is not financial advice, but the reason I've put these coins up on here, you can go look into them yourselves if you do want to take a deep dive, but I'm not telling you to invest in any of these coins. But these are coins that I recognize, and some of these I've even invested in myself, so that's why they're just being used as examples here. So we've got Telcoin, HTR, C8Z. Coin itself isn't really relevant anyways, but of course this makes up 25% of our portfolio, right? So a quarter. So this quarter is essentially, okay, our money is still essentially stable, or at least stable to an extent. These coins have lots of potential. However, because the market cap's a bit smaller, they might fluctuate more. They might have less stability. So therefore, we can't dedicate as much to them as the large caps. But saying this, because they have less stability and they're able to fluctuate more, that in turn can work in your favor, right? So this 25% here in your medium caps may be able to outperform your large caps purely because these are in simple terms unstable, let's just call it, because it's probably not the correct term to be using, but what I'm trying to get at is that they can be more volatile, meaning you can essentially make more money off them by investing less. Then we come on to our small caps. Now, small caps are the other end of the spectrum, probably much riskier plays than all of these other coins here, probably less established projects, less developed. But if you're doing your research and you see a bright future for these projects, you could potentially put in very small amounts and still see very, very good returns on your investment. You could be putting, of course, here I've listed 5% per coin, right? 15% of your portfolio here is small caps, because as I said, again, probably not the correct term to be using, but they're less stable in an investment sense, right? So therefore, you don't want to be putting as much money into them. But if you're doing your research and you think, okay, this project is good, XYZ, you've got all your reasoning, you've got your conviction, then you invest, then you know it's the correct decision. You can put in that small amount of your portfolio dedicated to the said coins, and potentially these coins may even end up making you more money than your medium caps or large caps, possibly. I'm not saying it's guaranteed, but that's kind of the thought process that I like to have behind it. You can dedicate less money to them, but they might still end up bringing you equal or greater returns than your medium or your large caps, right? And then, last thing, your stable coins. There are other stable coins. You've got BUSD, USDC, UST now. So it's up to you whether you want to hold. Um, Over here, I've listed Tether. Everyone's probably heard of it. It's the most common one. So you always want to have that small, well, I wouldn't say small, but a decent amount of fiat currency ready to buy dips. When these coins start dipping, you want to be ready to reinvest, because these projects that you're reinvesting in, if the price is cheaper but the project is still the same, you want to be buying, right? So what I'm saying is, imagine, I don't know, somebody's selling you gold for $100, and then 2 days later they're selling it for $40, but it's the exact same gold. You'd buy it, right? Nothing about the gold has changed. You'd think you're getting the gold at a discount, why not buy it? So that's kind of like the mindset I like to have with these coins. I don't really invest in coins unless I've done deep research into them. I've looked heavily into the teams and the project itself. So that's why I think having a decent amount of fiat currency, because crypto itself can be very volatile. You will get dips, you might get crashes. You want to be ready to accumulate these coins at the lower prices if you see a bright future for them. Okay, so some key points that I'd quickly like to cover, right? So of course, this is just one example of a portfolio, and I'll just explain to you guys why I'd be reaccumulating coins when price dips, because I see a brighter future for these coins, right? So essentially what I'm saying is I'm planning to hold most of these coins for long term. A lot of people, what I've seen them do is have two portfolios, a smaller one for short term, where they're essentially trading, catching 10%, 20%, so forth, whatever, but they're trading in the short term, they're trading for a few days, for a few weeks on positions. But with your longer term coins, what they'll usually do is keep accumulating the coins. Don't really worry about the number in terms of currency, but more about how many coins you can accumulate and gather and have under your possession over time, right? So this example isn't what a short-term portfolio will be. A short-term portfolio might potentially be 50% Tether, or it might even be, for example, I don't know, let's say maybe 90% in positions and so forth. I'm not saying what's right or wrong there. With short term, it can be very different and it will be suited to your own trading style. This, in my eyes, is a good long term portfolio example. So, again, you want to be allocating according to market conditions. So, when this video is coming out, very recently we've gone through a bit of a crash in the markets, right? Bitcoin's dipped and so forth. This portfolio is not a perfect example. A lot of people may have started cashing out of their positions. They may have been moving into stables. They might have 50% stables and 50% long-term holds that they're not touching, right? So sometimes these figures are just, they kind of tell you the general gist of what you may be investing. It doesn't have to be to the dot. If this 20% turns to 21% doesn't mean you instantly have to go and spend your stable coins to balance everything out, right? You have to look at all the other factors. There's lots of different things going on in the economy and so forth. You just have to make a kind of good decision after judging everything around you. The next one that I'd like to talk about is over diversification, right? So getting into crypto, I think a lot of people do struggle with this. They'll try and invest into every project. Usually this happens because you're not doing your own research. People are telling you buy this, buy that, buy this, buy that. You literally want to get into everything. So what they do is end up spreading themselves too thin. So what happens is, here I've got 3 coins, I've got 3, and I've got 3. So in total this is 9 coins, right? Some people, most likely ignoring the large caps, they'll probably come into the mid small cap and have like 10 coins here and then another 7, 8 here. Like, you don't want to be investing into a lot of coins. Like I said before, I mentioned you want to be looking at a certain number of coins, potentially doing your research into each coin, and then picking 2 or 3 of the coins that you'd most like to invest in, your large caps and so forth, for your mid caps and small caps. The ones where you see a brighter future, you pick. The ones where your mind feels more at ease, that's the ones you go with and pick. The last point I'd quickly like to make: rotating allocations. So having a system that's organized, right? So everything here is allocated by percentage, right? So what you essentially want to do, of course, over time, you're gonna have profit in some of these coins. They're gonna be going up and down, up and down, up and down. What you want to do is essentially funnel that profit and keep things balanced. This isn't necessary, but I've seen this work for other people and it might be something you'd like to take on. So for example, let's just say you're 5% off Plu. Out of nowhere, Plu just blows up, which it recently actually did. It does over 100% and so forth. Now this 5% turns into 9%. A lot of people, what they probably should do is take your profit off the table, still hold your 5% of Plu, take that 4% and maybe redistribute it to I don't know, let's say your Ethereum's come down to 19%, 18%, so forth. Like I said, this is not necessary. Some people like to do this. Other people may just continue holding. They might not even allocate percentages at all. They might just see it as, oh, I've got 3 coins here, 3 coins. At the end of the day, this is just an example. This is what I wanted you guys to see to get a deeper understanding of things. It's not necessary to follow this, even this exact system, but I hope you've gained the understanding to an extent to be able to understand what's actually happening. Just said and understand a lot of times there, but I hope you guys realize the importance of managing your portfolio, doing it accordingly, and why it can be useful. If there's any questions, if you need any other help, all my socials are on the screen, and I'm going to see you very, very soon with a lot of new videos on risk management.